Hello everyone and welcome. Thank you for joining us for this timely session hosted by Continental Capital Limited, your partners in growing wealth. I'm your moderator today, Isabel Masika Chincheka. Over the past few weeks, we've seen a noticeable surge in interest around the stock market. Many people are eager to understand how it works, how to get started, and how to make the most of the opportunities it presents. That's why we're here today to help you learn, grow, invest so that you can build your confidence and portfolio together. Today we'll cover 3 practical high-impact topics. Firstly, how to pick a stock or listed share to buy, when and how to reshuffle your portfolio for better returns, and thirdly, the rewards and risks of margin trade to leverage your investments. And to make it even more real, we'll hear from one of our valued clients, an active investor who will share his personal experience in navigating the market. At the end of the presentation, we'll also have a brief question and answer session. So during the course of today's presentation, you can type your questions in the chat box and we'll address them at the end of the session. So we have a great lineup for you today. First, we have Kenneth Madi, who is the General Manager for Continental Capital Limited. He has over 12 years experience in capital markets and has provided advisory services to clients who have managed to build their portfolio beyond 1 billion kwacha. We also have Tafadzwa Mwawa, who is Continental Capital Trading Manager. She has over 7 years experience in capital markets, providing advisory services to retail and corporate clients. And our client is Kumputso Ngayaye, who will be sharing his investment journey with us. Before we get started, Kenneth, we have noted a lot of activity on the stock market over the past year. Could you give us an overview of how the stock market has been performing and how your company has been coping with the increased demand?
Thank you, Isabel. So, first of all, let me break down the numbers to you on how the MAC has performed. You see that in terms of number of trades, volume of shares traded on the MAC, if we compare last year up to July with this year, 2025 up to July, you see that the volumes have gone up by 45%. The return on the Malawi All-Share Index, the MASI, has also gone up year to date, 2025, up 160%. If you look at last year, 2024 full year, the return on the MASI was 55%. So you see the reasons why people are interested, because the returns are higher as well as the volumes are also going up, backing up what you've said. So why is demand going up? There are 2 reasons. One, good performance of the listed counters. Our browser is mostly anchored by banks, and the banks have tended to do well. That's why you're seeing that the demand is high. There is also increased awareness on investing in shares. There is the RBM literacy program that they go around teaching people about shares. Us brokers, we are also doing our part. One of the initiatives is what we are doing now, trying to reach out to clients and then explaining the benefits of investing in shares. They also, there's social media, which is also great. And there are a lot of people that are talking on the social media about investing in shares and general comments on how people have benefited on the investing on the shares. But there is caution there. This social media frenzy, we just have to be careful who we are listening to, because they are registered investment advisors that are there, registered by the Reserve Bank of Malawi as well as the MIC. My take will be you should listen to those people. They are registered for a reason and they've got the required experience. So stick to registered advisors on the MIC. Moving on to what CCL is doing, we have indeed faced an increase in terms of the clients that we are getting. What are we doing? One, we are increasing staff capacity to be able to handle these clients as they come. Two is the systems. We have just launched an online onboarding platform where clients, instead of visiting our clients, they can go to our website and then do all the KYC there and submit to us. We have also increased outlets, how clients can reach us. We are the only broker that have got dedicated offices in Mirongo. No other broker has that. It just shows our efforts in trying to serve our clients better. That's what I would say for now.
Thank you, Kenneth, for these insights and for sharing what efforts you have put into place to address the escalating needs of your clients. We will now start our first topic for today. Taffy, with this increased hype, many people are entering into the market rather blindly, as Kenneth has alluded to, maybe not referring to advisors who are registered. So could you please enlighten us today on how we can go about picking which share to buy, not following our emotions, but using the advice that you as registered advisors would give a client?
Okay, thank you, Isabel. This is indeed a timely question. Every time, whenever my phone rings, the question people ask is, which shares should we buy? I browse through my emails, the question that I'm getting is, which shares should I buy? So we have realized that a lot of people, they need to know how to pick a stock. I would say picking a stock is like buying a car. You don't just go into a dealer and just pick and just say, I want that white car. No, there are several factors that you have to consider before buying a car. Like for example, I'll talk about fuel efficiency. You have to consider that, the engine size of the car, even the purpose of the car. What are you going to use that car for? Is it for carrying goods and services, or is it a family car? You also look at the condition of the car. Those are the things that you consider. Some, of course, they even look at the comfort of the car and the style. Some, they even consider issues of speed, you know. So what am I saying is there are various aspects that you think about before parting with your money. So going now to stocks, maybe I'll start with a quote from Peter Leach that says, know what you own and why you own it. There has to be a reason on why you own something. So starting with picking a stock, how does one pick a stock? First things first, one has to have a very clear objective on why they are picking a stock. They have to have a why. Why am I investing as an investor? That question, it's fine to have various answers to that question on why you are investing, but it's a problem if you don't have an answer at all. We do have people coming to say, I want to buy shares, and then you ask them, so why do you want to buy shares? They're like, I want to make money, you know. Some they'll say, because people are investing, you know. So people are getting in without really the right reasons on why they are getting into the stock market. You have to have a very clear objective. The other thing to note about an objective, buying stock, it's a long-term investment. It's not something that you can look at short-term. You have to really consider long-term when you're going into stocks. So I'll give you an example of when you're buying a stock. Let's say, for example, you've got a short-term goal of buying a car, because each and everyone, they have future and present obligations. Each and everyone has got short-term goals and long-term goals. Let's say I want to buy a car, and I want to buy that car in 3 years. So you come up with a budget to say, okay, this car will cost, let's say, for example, 15 million. And at that moment, you don't have the 15 million, but your goal is to buy a car. So what you do is you invest something. Let's say you start with 1 million or 2 million. So whenever you get your capital gains, let's say you get your capital gains to 4 million, you add more money. So you realize that with the capital gains that you get, with the dividends that you get, some they even do set standing orders whereby they'll be investing as well. So with all that, you realize that you are able to achieve your goal to say, I've got my 15 million, I can sell my shares and I do what I want to do. So it's very important to have a very clear objective when you're investing in shares. The other thing that is very important when you're picking a stock is the financial performance. This is the heartbeat of each and every company, and it should be the heartbeat of the investor as well. To say you have to understand the performance of the company. What has been their profitability over the years? It's not just looking at that particular year to say this company has made this much, but do you really understand where they are coming from? How have their profits been faring? Have they been going up? Have they been volatile? Have they been going down? You also have to know the reasons. If the profits have been going up, why? If the profits have been going down, why? You have to understand that. And look at a period, let's say 2020 to 2025, or even a 10-period stretch, you are able to identify the trends. Another thing in terms of the performance, you have to understand how that company makes the revenue. How are their revenues? How do they generate their revenue? And what drives their revenue? You have to understand that. To say, because if you're an investor, Isabel, when you buy a stock and that company makes money, you also make money. So you have to understand to say, okay, so how is this company making revenues? Maybe I'll give an example to say, like the telecommunications, how do they make revenue? I know there are various ways they make revenues, but one of those is whenever we buy the data and airtime, that's how they make revenue. So the more people who buy data, the more revenues they make. And if they are good with cost containment measures, it all drives down to profitability. So all these things you really have to understand as an investor. One key thing as well that one has to understand when they're picking a stock is the ratios. How is that company performing in relation to its peers on the market? You look at ratios like the price earnings ratio, price to book value, because these ratios, they help you to understand if that company is undervalued or overvalued. So those are the things that you have to consider as well. The other thing that is key when one is picking a stock is to understand the strategy of the company. Where is this company going? What are the opportunities there? You have to understand the strategy of the company. Somebody can say, but Tafi, where can I get all these? How will I know the strategy of the company? Isn't it internal? Yes, it's internal, but companies do share such information. The good thing about listed companies is that they are obliged to be transparent. They are obliged to publicize their information. Like if you are to go to the annual reports, every year, each and every company, they do annual general meetings. So they produce an annual general pack. So if you open there, you'll even see the chairman's statements, use the CEO's comments, you will even see, they also put a statement about the strategy of the company. And the other way is you can go on the company's website. They have a section whereby they write investor relations. So go there. You can also get information about that company. The other way you can also get information about that company is investor forums. Now most of the companies, they're doing the investor forums. This is whereby they give a privilege to the investors to be able to ask the management the questions, and also to be able to know where the company, where is it coming from, where is it going, what are the challenges they're facing, what are the opportunities they are facing. So it's very important to put your heart into these listed companies if you have put your money into it. So it's very important to understand that. And another thing, maybe the governance issues also, they're very key. Understand the board, their expertise, how will they contribute to the company. Understand as well the key personnel of that company is also important in making a decision. Moving on, each and every client has to have a risk-based approach when they are picking a stock. So instead of putting all your eggs in one basket, you should consider a diversification. You can invest in different counters. You can invest, let's say, in the banking sector, different banks, or even different sectors. You invest in telecommunications, you invest in the banking sector. That is also key for one who is picking a stock. And lastly, but not least, Isabel, if one is picking a stock, we do have some saying, this is too complicated, I don't have time, how will I know this? Seek professional advice. We are there as the brokers to guide you. We also have asset managers in the industry. They are there as well to guide you on how you can navigate, on how you can pick the right stock. And just a caution, in picking a stock, don't do what we call heading. Heading is whereby you follow what other people are doing. If people are buying this, you are buying that. You are buying that stock as well. But without really a reason, why are you buying that stock? You're just heading because people are buying that stock. So you have to know why you are buying that stock. As I said, so when you're investing in stocks, know what you own and why you own it. And also maybe to also highlight this to say stock market is a long-term investment. If the stock market performs very well, you should be happy. But you should know that at times the stock market, the prices, they do go down. You should be aware of that, because you'll find out that some other people, they get emotional to say, no, I'm losing money, they start selling. But if you've got a long-term objective and a clear objective, you'll be able to sell your shares at the right time, not with emotions. With that being said, Isabel, that's how one can pick a stock. Thank you.
Thank you so much, Tafatso. That was a very clear guide on how we can go about deciding which shares to pick to buy. So here's in an industry or across the board, and also their strategies. You've mentioned so many different sources of information that we can actually try to gauge how a company is set themselves out to be, and whether those things are things that we identify with and are interested in. So that leads us to our next stage, where maybe we have bought different shares and now we're thinking, okay, how do we balance our portfolio? So Kenneth, maybe you can take us through how one can go about balancing their portfolio, and when and how to adjust their investments for optimal performance.
Okay, thank you, Isabel. Let me start with a quote by Warren Buffett. He says, and I quote, "I never attempt to make money on the stock market. I buy on assumption that they'll close the market the next day and not reopen for the next 5 years. Also, another quote from Charlie Munger, he says, it's not in the buying and selling, it is in the waiting. Meaning to say, stock market investment, it's a long-term game. Yes, you can choose to change your portfolio, but it doesn't have to be ad hoc. You need to have a game plan and you need to have concrete reasons as to why you want to change your portfolio. So, when should you consider to change a portfolio? I'll look at 3 main topics. One will be internal factors, what has changed in the company that you have invested in. 2 is external factors, what has changed in the space that the company that you are investing in that is affecting the company you have invested in. Lastly, I'll look at the investor. What has changed in you as an investor to warrant a change in the portfolio? So number 1, internal factors. You should consider if there is a fundamental change in the strategy of that company that you've invested in. The question you should answer is, has anything happened internally that is affecting how this company makes money? You look at number 2, change in key management. They say that everything rises and falls on leadership. And sometimes you see that a key management have left the company. You then start saying, will the ones that will come really drive this company the way the previous ones were driving it? For example, Tesla. If you mention Tesla, everyone knows Elon Musk. Recently, he was just been paid a lot of money just to stay in Tesla, just because people like the way he drives that company. It was the same with Apple when Steve Jobs was still alive. People just wanted, to associate with it because they like him, the charisma and everything like that. So key management play a role in whether you need to shuffle your pack or else stay. Number 2, it's the external factors. You look at things like government policy. What has changed in government policy that is affecting the company that you have invested in? Recently, there was a lot of talk about interest rate capping. And then if you're invested in a bank, you're then asking your questions to say, okay, what impact will this have on the company that I've invested in? There are also taxes that are levied to specific industries. And then when government has changed, tax laws targeting specific industries that you've invested in, you know that then the profit that will be shared to investors will obviously be reduced because the companies share profit after tax. So any decisions to do with tax, increasing taxes, will obviously reduce the profit after tax, thereby reducing the money that is available to be distributable to investors. It can be things like, let's just say, plastic ban due to the environment. And then if you're invested in a company that does that or uses plastic in their products, you're then asking questions to say, what impact will this have on our portfolio, the investment that we've done? It can also be another external factor, can be changing technology. Then you're asking yourself to say, okay, what is happening here? And then how will it affect my investment? A simple example would be things like Nokia, for instance. When we were growing up, everyone wanted to have a Nokia. That was the phone to have at that time. But because they didn't change according to technology movements, when the smartphones came into play, you find that now Samsung is the phone to have, iPhone is the phone to have. So Lastly, we will look at changes in the investor. You as an investor, what has happened to you to warrant a change in the assets that you're investing? Number one, I'll look at age. Your age plays a part. When you're younger, you've got time to invest in more riskier companies that will have a higher return, but it may take time for those companies to realize those gains. As you age, you don't have the time to play the risky game. You're looking for an investment that's more stable. You're then looking at, let's say, the well-established banks, for example. You're looking for treasury notes, for example. The reason why is that your income levels have also changed as you age. Maybe you've retired, so you no longer have your salary. So you then ask yourself to say, where else can I get cash flow? Then instead of having everything in shares, you're diversifying and buying a treasury note. The reason why you want those coupons that are normally paid semi-annually to come to you. So at that point, you then rebalance your portfolio. If you had stocks, you buy treasury notes. If you had riskier stocks, you then diversifying and then buying more stable counters. The other thing that may have changed in the investor is the concentration in the industry. We have said that currently the share prices are increasing on the stock market. So let's say, for example, you started on an equal balance. You bought 10 million in the banks, 10 million in hospitality, 10 million in property, for example. Now, as time goes, you find that the banks are performing much better than these other industries. You find that after 5 years, for example, your portfolio investment in banks has changed from 10 to 70. And then the hotels have changed from 10 to say 30. And then the property has moved only by 10%. You see that automatically your portfolio is now more skewed towards the banks. And then it's okay to say, okay, let me sell off some of the stocks that I've made money on and then diversify into the other industries. Lastly, on how to change your portfolio, you engage your broker and then you submit your orders accordingly. Thank you.
Thank you, Kenneth. Wow, there's a lot to take into consideration when one is thinking when and how to restructure their portfolio. You've mentioned changes in the company itself, the macro considerations, maybe regularity issues or changes in technology. We've also looked at changes in an investor. I mean, as we're growing older, there are certain things that we need to take into consideration with regards to how our portfolio would be structured, as well as maybe the concentration of the portfolio with time. I guess things are always changing, and it's at some point a lot of research for an individual to do, which explains why we need to call on experts like yourselves whenever we're making such critical decisions as to how we're going to restructure our portfolios. So now we're going to go into the third point, but before we do that, let me just remind those who are joining us online that you can send your questions in the chat box and they will be addressed at the end of the session. So please keep the questions coming in and we will do our best to address them at the end. So the next topic, we've been talking about restructuring our portfolio, but now we're going to take it a step further by looking at margin trading. So margin trading can amplify our gains, but it also has some risks. So Tafatwa, if you could first explain what a margin trade is, and thereafter, Kenneth, if you can explain how best one can go about using a margin trade to grow their portfolio.
Thank you, Isabel. A margin trade. Basically, a margin trade is a facility that we give to our clients to be able to buy more shares using their existing shares as collateral. So in terms of the collateral, what we do accept is listed shares and government securities. It can be treasury bills or treasury notes. Unfortunately, we don't accept motor vehicles, we don't accept houses as collateral. No, we only accept the listed shares and the government securities as a security. And then in terms of the value that we do advance a client, we advance about 60% of the total value of the client's portfolio. For example, if the client's portfolio is around 10 million, we can advance up to a maximum of about 6 million kwacha. And then in terms of the repayment period, we stretch from 12 months, maximum being at 36 months, which is 3 years. So basically, that's a margin trade.
Thank you, Tafatwa. I'm sure there are people listening right now and wondering, okay, if my portfolio is X amount, do I qualify? So is there a minimum amount that one's portfolio must be for them to be able to benefit from a margin trade?
Okay, thank you, Isabel. So for one to benefit in getting a margin trade, their portfolio has to be at least 10 million. Yeah, so what we do, we advance 60% of the portfolio. If the minimum is, if the client has 10 million, we can advance about 6 million kwacha.
All right. And the repayment you've mentioned from 12 months to 36 months. Is this something that is equal installments, or can I use my dividends and maybe coupons from a treasury note to pay it off? Like, how does the repayment work?
Okay, thank you, Isabel. So in terms of the repayments, usually we do monthly equal installments, whereby a client sets a standing order to be repaying on a monthly basis. We do also consider quarterly repayments for clients that have got maybe liquidity inflows in terms of quarterly. And then in terms of semi-annually, we do also consider, especially if the client has invested in a treasury note, whereby he'll be receiving coupons semi-annually, so they can use those coupons to be able to repay a facility. And yes, dividends we do accept, because dividends, they're like an icing on the cake. They help you to fast track in paying up your facility. So yes, we do accept dividends.
Thank you, Tafatwa. That sounds really interesting. So I could use my dividends if the counters that I have are declaring a profit, and then I can also use the coupon or the interest from a treasury note, which actually makes the repayment a lot easier. Let us find out more though about this margin trade. Kenneth, could you just shed more light about some of the things we need to take into consideration as we're looking at using a margin trade to grow our portfolio?
Okay. So, just like Tafadza said, these are facilities that enable you to leverage on what you already have, whether it's government securities or shares, to buy more shares of government security. So, this is one of the best products that we have. Margin trade will allow an investor to invest at the time that they have spotted an opportunity on the market, but they don't necessarily have the funds to fund that purchase. That's where we come in to then assist. So I have seen clients growing their portfolios exponentially just because of these margin trade facilities. I'll give you an example. When Airtel was listed, there was one client who borrowed about close to 300 million from us. That portfolio today is in excess of 1.6 billion, meaning to say 1.3 billion is unencumbered. recently FDH, when it was listing, there were also some clients that obtained the facility, but now if you look at their portfolios, they are in excess of 2 billion. So it's something that is very good, and you tend to lock in the prices before they move up. Say for instance, when FDH was listing, it was at 10 kwacha. Now it's around what, 600? Yeah. So you can see that the growth is just insane. So even if you had bought your shares at 10, hold for 3 years, you see that selling them, you could pay off the facility and then stay with the unencumbered shares. A margin trade also instills discipline in investors. Why? You will not have money sitting aside all the time to invest in shares, but you can make monthly repayments, bullet payments, bit by bit. So you lock in the price today, repay monthly installments, and then at the end of it, you've got a bigger portfolio. When you know that you've got an obligation to make, in this case it's the loan repayments, it's easier to stay the course and to be disciplined rather than saying, okay, I will invest when I have money. It will never happen. But when you know that when I get my pay, this much is going towards the facility repayment, then you have that discipline to go on. So I would urge each and every one of the qualifying clients to consider a margin trade facility. Lastly, I would want to mention about making sure that you're diversifying your investment from the shares or the securities that you buy using the margin trade. The reason why it's all rosy when everything is okay. We have I've given you examples of portfolios that are growing. What if the shares that you've bought are going down in value and then you've borrowed? Then the situation changes. So you need to be careful to say, when you've accessed the margin trade facility, make sure that you are buying different shares in different industries just to hedge against movements in one industry. You can also choose to split it, let's say 60% in shares is just an example, 40% in treasury notes. The reason being, with treasury notes, there is a fixed return that one gets. So you already know. For instance, now 10-year treasury notes are at 35%. These facilities we're talking about, they range around 30 to 32%. So obviously you're investing in an asset that's yielding higher than the loan that you have. So Isabel, in closing, you need to diversify in terms of how you use the money that is coming out from the loan that you've taken. You need to seek professional advice, and you need to have that discipline by making sure that these facilities are performing. You are repaying those facilities, because the longer you stay with the loans, obviously the interest expense goes up and then the returns are reduced. Sure.
Wow, Kenneth, that's really inspiring. The examples you've shared of clients that have managed to grow their portfolios phenomenally using a margin trade. You've mentioned things like discipline and diversification. So I'm sure that's something that our listeners will really explore as they look at growing their portfolio. Now, you mentioned about what might happen if things go a bit pear-shaped, things don't work out as you had planned. So what happens if, say, maybe you did try to diversify your portfolio, but you didn't, well, maybe you got unlucky and the counters that you invested in are not doing too well. what can one do in such an instance where they start to see the value of those shares that they got a loan for diminishing? Like, what advice or what steps can be taken to correct that?
Okay, so first off, when we are advancing, we have a buffer. Say for instance, if we lend you 10 million, we can't also have the portfolio pegged at 10 million. That's what Tafadza was saying, that there is a haircut on the shares that you have. So there is a buffer to say, for instance, the loan is 10, your portfolio at the onset will be 25, including the shares that you've bought. Okay, so you may have 15 million already, and then we have advanced 10, taking you to 25. Okay, so you are already starting at a higher value. As things are going on, it's better to keep updated on how the market is performing. They are circuit breakers in terms of how much the share price can tank in a day. It can only go down by 15%. It can't go beyond 15%. It's a rule on the market. Okay, so it's better to keep abreast of what's happening. And if you see a trend, it's okay to say, okay, let me sell some of the shares that I bought using the facility to repay the facility, to reduce it to some level that is now okay for you to say, okay, at these levels, I can repay this facility comfortably and still make money off it. Just to remind you, I've said at the beginning to say investment in shares is a long-term game. So don't be alarmed by the short-term fluctuations that will happen in any market. Share prices will fluctuate. But if you play the long-term game, you will always be in the money. Let me give an example of how the market has performed. If you look at return on the Malaysia Stock Exchange over the last 20 years, over the last 10 years, on average, you see that the mass has grown by almost 45%. This tells you that this is an average. So in there may be some stocks that have grown over 100%, 200% in some instances. So making the money, you will. You just have to stay the course and make sure that even if there's a dip in the investment that you've made, the shares that you've bought, if we look back, you find that the shares do peak. I'll give you an example. In 2023, we had a devaluation of 45%. Most of the telecoms were hit. Airtel and TNM. They posted losses in that year, leading on to that year. The share price tanked by over 50% in case of Airtel. Okay, but look at it now. It has gotten back to the levels that it was before it started going down. It has even exceeded. That emphasizes the point of having a long-term perspective when you're investing. Thank you.
Thank you so much, Kenneth. So for all of those who are following us online, you've heard it for yourselves. You need to have a clear objective as to what you want to achieve with your investment. You need to make an informed choice. Do your research, get advice from a registered financial advisor. You need to keep monitoring different trends on the market to stay informed, and you've found ways in which you can actually leverage your investment. So this has been an outlook from the technocrats in this space. Soon we'll be hearing from an investor who will share his real journey and the insights and advice that maybe he can share with other potential investors and those who are already in the game. But before he comes in, please continue to share your questions, and we'll take a short break as we introduce Kumputso to the stage. So just give us 2 minutes and Kumputso will be sharing his amazing journey with us. Welcome back to our viewers who are joining us online. As I said before we took a break, we've been listening to the technical part of how we can go about growing our portfolios, building our confidence. But now we're going to actually hear it from a client, someone who has walked the journey and has agreed to share his journey with us. So Kumbutso Ngayaye is an investor with Continental Capital who's been navigating the stock market and building his portfolio. He'll share his personal approach, some of the lessons, and any advice that he has picked up along the way. Over to you, Kumbutso.
All right, thank you very much. As Isabella mentioned, my name is Kumbutso Ngayaye. I'm 31 years old. Professionally, I'm a civil engineer. I'm married and with 2 kids. So my journey starts 2023. At our church, Race for a Purpose Ministries, there was a financial success conference that we had. And one of the speakers was Ben Nkoma, Mr. Benedicto Nkoma. I'm sure most of us are now aware of him. He makes a lot of posts regarding the stock exchange. So in 2023, I think my financial state with my family was a little bit desperate. We were looking for solutions that can support us financially, looking at that, okay, we are employed, my wife and I, but as it is, maybe we may not be able to reach some of our financial goals or financial targets. We were not doing active business or anything like that. So we needed something that can suit us, particularly to be able to allow us to continue working, but also help us to earn some money from somewhere. So because of our condition, we ended up attending this financial success conference. So fast forward, when we attended, what we saw is Mr. Ben Nkoma was explaining his story about how he and his family were able to make a lot of wealth from the stock exchange. It's something that I already knew, but in any case, I think it really helps to have like a testimony, a real live testimony from somebody to see how they themselves were able to navigate on the stock exchange. So his story was very inspiring to me. And we went back together with my wife and we sat down and we said, okay, I think maybe it's time for us to also engage or start investing on the stock exchange. So from that point on, we started setting aside some money. Then we started buying some few shares. The first counter that we had bought at the time was for FTH when it was selling at 68 kwacha. Friends here have mentioned that FTH started at somewhere around 10 kwacha, but we were lucky enough to buy FTH Bank when it was selling at 68 kwacha. And it wasn't a lot of money that we had invested. It was around 200,000. So we'd invest 200,000 here, we'd invest 50,000 in another month or something like that. But over time, our portfolio started growing. And I think when we started seeing the changes within the market, how things were happening, how things were going, we then started asking ourselves questions to say that, okay, we have invested 50,000 at this moment of time, we've invested 200,000, and we've had maybe 300% gain in that investment. What if we can add a little bit more zeros in front of the investment that we were doing? Because as much as we're investing smaller amounts, we still have the potential to be able to source more funds. So we started getting creative, we started opening up some businesses, we started partnering with people so that we can increase our capital, if I may say, so that we may be able to buy bigger chunks of counters. So fast forward today, I think even earlier on this year, I've been able to rope in a few business partners of ours to say that we should also start investing as a business. And we have seen very good growth in our portfolio. Just this year, we were able to access our first marginal trade facility ourselves, and our portfolio is growing wonderfully. So I think as the Kenyan Minister for Finance or something like that, he likes to point out that the economy is moving wonderfully. So in my case, I think it is the same. So I think for my case, this is how my story has been. We have been doing this quite a bit, and we plan still to continue to grow our portfolio using margin trade facilities, using our own capital, so that at least we can have more or less like a balanced outlook. So it's very interesting how the previous speakers were mentioning some people. Just yesterday on the stock exchange, somebody had made a report and mentioned that for Elon Musk, for every $100,000 that he had invested in Tesla, he was able to generate 900 million dollars in the same company. So it can show you the potential for the stock exchange, and also even the examples that we heard that somebody borrowed 300 million and then his portfolio is somewhere around 1.6, 1.2 billion. It just gives you an idea of how much the stock exchange can be able to do for you in terms of wealth creation for a person or even for a group of people that are actively engaging in the stock exchange. So as Isabella mentioned, my advice would be to say, my story, basically, we didn't just start investing. We did our own homework. We started, as much as we were inspired to start investing on the stock exchange, we wanted to learn, because we believe knowledge is power. So we don't want to enter into something that we are going to be engaging with, but we don't understand how people actually make money. So we started studying, we started looking at videos on YouTube, any other material that can be relevant for our knowledge or gaining our knowledge became relevant. So we started learning from the likes of Peter Lynch, Howard Marks. We have the Charlie Mangers and also the successful entrepreneurs, even here in Malawi, that are engaging on the stock exchange. So all this process helped us to make more informed decisions, to a point where even Tafadzwa yesterday, we were laughing to say we are now able to speak the same language because we have knowledge or good knowledge of the stock exchange. So even the conversations are easier. When she talks about PE ratios, I'm able to understand what she means, as much as I am an engineer by profession. So you could see that it really doesn't matter where professionally where you stand, but in any case, if you are able to understand the basic elements of the stock exchange and you become a good student, you should be able to do well in the stock exchange. So the first thing that I would advise for my fellow colleagues or the fellow youth, being 31, is that it is very important to gather as much knowledge as you can regarding whatever endeavor that you are getting into, especially the stock exchange. Learn to, see how things are moving and learn to make your own decisions. That there have been even times where, based on the information that I know, I would disagree with Tafadzwa to say that, okay, you have recommended me this counter, but based on what I found, I think this is the best counter that I should take. And I'll take that and then I'll come back with my notes and say, look, this is how my portfolio is going now and this is how we're moving. So that can only happen if you yourself are investing into some information, into some knowledge that is relevant for your portfolio. So yeah, my second advice is to say, start where you are and stay committed to that. We started investing 200,000. Unfortunately, I may not be able to share the size of my portfolio, but in any case, we stayed committed and we grew in the process of our investment journey. So it has really been beneficial for us. And the other thing is that my focus is to buy great businesses. So as much as there is the hype that they were talking about, the other speakers were talking about, social media, you see almost every day, almost everyone is posting about the stock exchange. I don't get moved by those types of discussions. I pay attention to them because there's some information that I can, make use of. But in any case, they are not what guide my investment decisions. So my focus is to buy great companies, to see and understand the dynamics in which these great companies are performing under, and that has been my focus. Thank you very much.
Thank you so much, Kumbutso. You've heard it for yourselves. Kumbutso's economy is growing wonderfully. And he's shared a lot of insights. I think for those of us who are seasoned investors, those who are thinking of growing their portfolios, there's a lot that he's shared in terms of being very clear about what your objectives are, to the point that maybe if you're getting certain advice, you can actually say, no, that is not in line with what I want to achieve. He's also talked about things like discipline, where he was able to put aside money every month to make sure that his portfolio continues to grow. Also increasing the amount that he's putting aside. So many lessons there. I'm sure those of us following online, there are a lot of lessons that you've learned yourself, taking action. When you've got advice after this webinar, how many of you are going to take a step towards doing something differently? We've covered a lot today, from choosing the right stocks to buy, to restructuring your portfolio, to weighing the risks and rewards of margin trading. And what's the key takeaway? The stock market holds opportunities, but success comes from knowledge, strategy, and informed confidence. And Continental Capital are here to help you learn, grow, invest, and build both your confidence and your portfolio. Thank you for joining us, and we look forward to supporting you on your investment journey.